I think we're constantly trying to work out whether the markets are structurally in surplus or deficit or balanced. And if the market's balanced and prices aren't moving, that tells you something.
Right.
Uh, and we're basically looking for turning points. Is it a weather event that changes that? Is it a surge in demand that might change that? Uh, and if that's the case, what is then the function of price? We're constantly asking, what is the function of price? And that tends to lead you along the route of where prices need to go to create a more stable environment. For instance, earlier in the year, when prices were 125 cents a pound, we felt that there was huge underinvestment in supply. The
Right.
only reason that we hadn't seen significant stock draws pointing towards structural deficit was because of COVID, which had hit consumption for 2 consecutive years. Consumption growth has been pretty much flat for 2 years because of the changes brought about by lockdowns and shifts in consumption patterns and so on. Without that, prices would have had to have gone a lot higher a lot sooner. Now prices have moved up from, one of the points I made with the Brazil frost, the move from 150 to 200. It probably, for the forward balance sheet, gave us more production from farmers who are now getting a much better price than they were a year ago, than we lost to the Brazil frost.
Mhm.
But we needed that coffee. There's no question about that, which is basically why prices are still there. Whether we need to go higher to 250 or 300 or whatever, I actually don't think you get much more incremental production from 200 to 250. The big
Interesting.
increase is 125 to 200. That's when farmers feel a lot better off and are able to invest more and so on. Do we need to destruct demand? And to me, that depends on, okay, how severe are the weather issues that we're seeing at the moment? Will they resolve themselves? If they do, then prices at 200 cents a pound for a sustained period of time will do the job. It has done in the past. The spikes tend to be when we can't turn on supply quickly enough, and we have to destruct demand. It's not just the forward balance sheet either. One of the surprising things I've noticed since the price spike in July, we've actually added over 1 million bags to production in 1920. Now,
Mm.
sorry, 2021, the
Right. The prior crop.
coffee year.
Mhm.
And basically what has happened, very good prices has dragged out all the hidden stocks that were there that we didn't realize was there.
Mm.
We've had to increase our production numbers in India, Guatemala, Honduras, Mexico, Ethiopia, Uganda, ever since that price spike.
Right.
So basically, the higher prices have dragged out what was there. But that means because we've got an extra million, 1.5 million bags that we didn't realize, we have to add that into the forward balance sheet as well,
Mm.
because that implies that production was slightly higher. A million bags on 170 million bag crop isn't a huge amount, but when you add it into next year and the year after, it actually makes a meaningful impact. So, price is already helping in that respect. Even before we have the benefit from allowing farmers to apply more fertilizer, as they're doing in
Right.
Vietnam now compared to what they were 6 months ago, taking better care of their farms, and even before they start planting more coffee. We carry out surveys in the four largest producing countries: Brazil, Colombia, Indonesia, Vietnam. And we think we got reasonable information on stocks in those countries. What we don't know is what's going on in Honduras, Guatemala, India,
Right.
Ethiopia, Uganda, other than monitoring the exports. And you know clearly more coffee has come out of those countries, and it's all focused very much since the price spike. And
Mhm.
if it walks like a duck, it looks like a duck, and it goes quack, it probably is a duck. uh, and it just shows that production was probably a little better than we were believing 6 months ago.